Good day everyone and welcome to the premium video newsletter for June 27th, 2013. Let's start off with the fundamentals. Two reports came out that set the tone for today's trading action in the US stock market. Consumer spending rose last month as income increased. Claims for unemployment benefits fell last week. If this trend continues, Feds will probably discontinue or curb the bond buying program earlier than expected. Many economists and professional traders that I speak with believe that the Feds are going to be very conservative and wait till the U.S. employment rate is fairly low before cutting $85 billion bond buying program each month. The yield on the 10-year Treasury note fell to 2.48% as the 10-year bond futures contract continued bouncing up from a short-term oversold level. The 10-day RSI is coming up to neutral levels rather quickly, and I believe the futures contract will rise up to about 128 to 128.5 level and begin working back down from there. Notice the resistance area around that level. This is what I'm shooting for in the next few days, especially if this rally in the US stock market continues. Let's take a look at the intraday chart of the S&P index. The market looks like it's approaching the 1628 to 1630 level. I believe the stock market is going to have a difficult time overcoming this level, and if it does manage to get up there, there's going to be strong resistance around the 1645 to 1650 level that will be very difficult to overcome. I believe there has to be strong development in fundamentals for us to break through that level during this momentum rally, especially in light of the fact we moved up for several days in a row already. The gold market is continuing its decline, but I believe that as soon as the stock market rally wanes, which should be in the next day or two, the gold market will stall and begin accumulating that will last till about 1320 or 1340, which is about 100 points from where we are right now. If you're holding gold or gold ETFs, I recommend getting out and waiting for a correction. I'm fairly confident that we will see one in the next few days. Looking at our existing position, PFE looks to be turning the corner back in our direction. Just earlier, positive news was released about the company. That, plus the rally we witnessed today, could not keep the stock moving upwards. This demonstrates very weak relative strength, which is great for our short position. We have a buy limit order in place to liquidate the position at 27. We have not changed our stop loss level since we initiated the position a while back. The protective buy stop level is still around the 3010 level. One position we liquidated today was Borg Warner. The reason why I liquidated the position is because I believe there will be substantial overhead resistance near the high level, which is only about 1 point above the current price. I also think the stock market is approaching very strong overhead resistance around the current price levels. The current ratio of stocks closing up is about 5 to 1, and with the current rally that lasted several straight days, I don't believe we can continue this momentum to the upside. Another short position that we're currently holding is Portland General Electric. The stock is at the current resistance level as we speak. If the stock moves higher than this level, I will send out a liquidation signal. The protective buy stop is currently set at 3140, and I don't recommend you move it anywhere from here. I'm looking for a sell-off in the stock market, and hopefully this stock will participate. Looking at the currency market, the US dollar looks like it's a bit overdone for now. The market is hitting resistance levels and looks like momentum is slowing down. I wouldn't be surprised to see a correction to the 81.5 level in the next few weeks. The British pound looks like it's going to hit support and bounce off in the coming weeks, so look for a low at 1.51 or around that level within the next few trading sessions, especially if the US stock market begins to decline. Let's take a look at the setup for tomorrow. I have one setup, but it's a good one, and I want to use it to demonstrate something important to you. If you notice, we haven't had many setups during the last few weeks, especially tail gap trades, which are some of my favorite strategies. The reason why we haven't seen too many tail gaps is because they all have been against the trend, meaning the trend was moving up and the tail gap was moving down. As you know, I don't like to trade against the main trend, and this is why we haven't seen this setup. This particular setup, which happens to be Walmart, is a great example of a tail gap occurring in the direction of the long-term trend. You can see the stock has been moving down and the signal is a downward signal. I get at least 10 signals each day, but they are all against the main trend, and this is why I don't present them here. Always trade the tail gap in the direction of the main trend. The entry on the setup is 75.15 on a sell stop. If filled, place a buy stop a few ticks above today's high price. I'm placing the protective buy stop because it's a short position at 76.20 if the order is filled tomorrow. If the order is not filled tomorrow, cancel the entry sell stop. It's just a day order. That's it for today's tutorial. I will email you later today or tomorrow morning with any new developments. Have a great night, everyone.